All right, good afternoon. It is Power Hour, the final hour of the market. It is Wednesday, May 27th, 2026. S&P 500 and the QQQ Nasdaq did not gap either direction. They opened flat, and we're still flat, relatively flat. SPY's only up 0.05% at this point. Q's down negative 0.08%. We just closed a 5-minute candle up in the upper resistance level, but I would say this area here is acting as resistance on the day, and we have a previous all-time high from last week, which was no, from earlier this week, actually from Monday. We had a gap up, or from Tuesday after Memorial Day. We gapped up. We're into this resistance zone, which is kind of tough here. You know, this fair value gap that we had made here, we kind of acted as resistance quite heavily several times here going into the morning, and we've just consolidated. We've had a couple slip downs. I seen this red candle come in and close down here. That would have been rough, because I would have been inclined to enter there, although it's not enough confirmation for any trade, even though we closed technically below the low a day. But it totally reversed, and we're back here. The thing is that there is support. If you were to zoom out even further, this whole entire range here is acting as support in between this gap here still, and this range here is basically what we're holding off of the previous high. So we're making a higher high in the longer time frame. Negotiations are looking positive. We're breaking over 751, which is what I'm looking at today, is literally over 751. It's bullish, going calls over 751, and below 748 it's put. So we didn't actually get that below 748 today, and so yeah, so under 748 would be obviously bearish, and we would get the sell down. Over 751 today, which we're kind of just barely doing here going into Power Hour, is bullish, and I would be looking for some type of a momentum or retest here, or some confirmation to possibly go long, maybe off the 9, and try to capture a move maybe a little higher. But it's quite a slow day today, I will say. It's not a whole lot happening. You know, 65-minute chart, the Nasdaq really consolidating, the SPY as well, very much consolidating. And while on the ES, it's the same thing. It just has the overnight. It shows the overnight price action here as well, but it's the same exact thing. So it is quite a bullish price action, at least as of now, as we're touching 751. 65-minute chart, the candle closed. I don't know what time that actually closes. It's kind of a weird timing, but it's like 5 minutes before Power Hour. I'm not exactly sure. I think 5 minutes before Power Hour or something like that here. Actually, it's just interesting. We got this new 65-minute candle with a bullish candle by candle denotation here. So I think this candle can definitely possibly go for this new high and try to break out. And it is an all-time high on SPY. And like I said, QQQ made an all-time high at the open today. It opened up here because of MU, Micron making this insane move overnight again. This is an insane one. It gapped up. This is the reason why QQQ had made an all-time high today. This candle right here. This is the opening print, and it did the same thing. It's literally an exact replica, nearly, from this point on Qs and MU. But so the semiconductors are still being bid up, and the memory shortage is still being priced in. So that's pretty much it. I think that we have a good shot to go bullish, and QQQ has a similar setup. Not as bullish, but it did make a new high today. So we'll see if this can hold up and actually hold above 751. Then we could possibly look for a long position to take some momentum into the last hour of the day. There's like 50 minutes left, so maybe in the final 30 minutes there might be something. But if we were to lose the 9 EMA here, if this is the 5, then there is room right back down to 750. So that move alone could also be a possible trade. So I'm really just going to be looking and waiting here for an opportunity to present itself, although it's quite a stagnant market today. We're pretty much going sideways. So the volatility is not quite there, the opportunity isn't quite there. So I'm a little bit hesitant to take a trade very quickly or anything. What I want to see is a break above 751 closure and then a retest, maybe correlated with that 9 EMA, if it can rise up 20 cents to 751, and that would allow us to bounce off of it and hold this previous resistance here from earlier this morning as support, and then we can possibly go a little bit higher and fill a little bit more of this price action in. That's basically what I'm thinking about here today in terms of an opportunity to take a trade. Contracts right now on SPY are relatively cheap. The 750 put is 20 cents, 751 though is 50 cents, so it's definitely not affordable for me. I'm looking to spend, like I keep saying, my risk management strategy is taking a $30 trade, stopping out at negative $20 or $10 on the contract, and basically using that in order to gauge the ability to capture an outsized return. So if I have several losses, it can be completely recovered by one win that is held properly and the profit isn't taken too early, which does happen often. And I am looking to take profit slightly early because of the time frame that I have to trade, which is less than an hour, and also because my account is basically at the starting point still, and I'm trying to build it up to a few $100s to give me a little bit more room to make more decisions. So I have to be patient, and I'm looking for some type of momentum that can come in after this recent intraday rally back up to this resistance zone. We're either going to reject here and lose the 9 and come back down into the VWAP possibly towards the end of the day, or we're going to hold, break above 751 and move towards that 752 all-time high on SPY. And with SPY being at 750, QQQ being at 729, it hit 733 this morning. We're days away, maybe a couple weeks away from QQQ finally surpassing SPY in price, which is something I've been talking about a lot, and I think it's interesting. I don't know how, it's pretty relevant in terms of the technological revolution and with AI infrastructure, and the capital expenditure at the moment is extremely high, and it's given the QQQ that rightful boost, and its price will surpass SPY very soon, which in my opinion kind of marks, I would say, QQQ surpassing SPY on the index side just marks the beginning of some level of exuberance rising within this infrastructure build out and within technology innovation and the application thereof, which means efficiency of productivity, which means businesses make more money with less people. They're more profitable. It's easier for smaller companies to make money because they have tools at their disposal to be able to create products and services and increase and impact or improve their current products and services in order to offer better value to customers. And if businesses offer better value to customers, customers are willing to pay more. And sure, maybe they don't have a job, maybe they don't make more, but people can also start a business if they want. They can do whatever they want. People can start whatever. They can make money in a million ways. They can just invest into these names and then take the money and re-spend it back into the economy and then cycle it. And it can keep happening forever. And it's just the story of history is that with capitalism, money has to circulate and it has to be used for better purposes. So eventually it creates value to people and other businesses. And so when they work together, it just becomes exponential in terms of having more ability to use different technologies and tools to affect more better policies or better products and services, like I said. And so really, I think QQQ index surpassing SPY index is a very important moment in time where I think it marks the moment where exuberance in technology at the moment with what we have now is becoming real and becoming more realistic. Even though the past 4 years we've been rising and we've had somewhat of a development of these technologies, right now it's becoming more serious to the point where a lot of businesses are starting to really implement these tools. They're laying off 20-30% of their workforces on average across many of the high-flying tech companies and data infrastructure and information companies. They're reducing their headcount by 10, 20, 30%. Their profits are going to increase the same amount. So the price on a PE ratio, the price increases at the same time as the earnings increases, which means that the valuations become more reasonable and the multiples can become higher. Similar to the dot-com bubble in 2000, except this time it's more real and more realistic, because at that time we were at the very infancy of the internet, as well as specifically for regular people who didn't understand it and didn't know how to use it. It wasn't very fast, it wasn't efficient. But now they're coming out with agents to do all types of processes. They have robots doing all types of services or warehouse operations. And so the efficiency from this point forward is going to become exponential, and people will be surprised that they missed out by not investing in some of these names. Even MU at $900. I'm not saying it's a bad investment. I mean, it's at $1 trillion market cap wise, which is really not ideal compared to when it was at $90 in 2022 when I called it to go to 250 by the end of 2025, which it therefore did almost perfectly, which is surprising. And I keep holding that. I think that's one of the predictions that I've made that really bothers me, because I wish I just invested into the company at the time when I predicted it would go up 3-4x by the end of 2025. And then it did. And then right after it hit 250 at the end of 2025, it just doubled, tripled. Now it's at 900 in the next 5-6 months. And that's because of the memory shortage and the people realizing the need for massive amounts of memory and data storage, not only for AI, but for regular people too, for everyone, for devices, for laptops, for computers. Every single thing that stores data or transmits data has to have some type of storage, whether it's a cache, whether it's cookies, all these different things, but they're very small, and these are digital forms. The physical form of data storage is like a MU, DRAM, and whatever the other ones are, like just RAM itself, which, is part of the reason why NVIDIA initially got its big move back in 2016 or whatever, because gamers and people who knew about the company NVIDIA and understanding their standing in terms of technology could kind of foresee that these things would become more and more impactful, exponential over time, and therefore become more pricey, which brings more revenue and earnings to the company. And NVIDIA has done a 2,000% since then, honestly. Probably more than that, but I think NVIDIA has done like 2,000% in 10 years. Something like that. But so I'm really just going to be patient here, looking for a trade, looking for an opportunity in these last 40 minutes of the market. I don't know if there will be one. Maybe I'll take one. On the call side, the 751 call is sitting at 40 cents, which is a little bit more than I would like. We're at the 9 EMA here, so we'll see if it can hold or if it's going to lose that, and we might get a sell-off right back down to 750, which makes the day very choppy, very difficult to trade, and maybe not present a better opportunity. I would prefer to go long here and catch a move over 751 or 2, but I don't know if we have that level of exuberance today in terms of the trade negotiations and the conflict negotiations overseas with Iran and the Middle East are pretty uneasy, and they don't seem very realistic or reasonable at the moment. I would think that there's better ways that they can go about this in terms of disconnecting entirely from the situation, which we should have never been involved with or implicated by anyways, but it's because of other foreign influence like Israel that's having us come in and do the dirty work. And that's really all I can say about it. I don't really agree with it. I don't think that we should be negotiating. I think Israel should be negotiating with Iran. I think that's what should be happening, but it's not, because we're in a peculiar place right now, politically and geographically. It doesn't even make sense geographically, honestly, but anyways, I don't really want to go on a tangent about the conflict in the Middle East. I don't really think it is that important in terms of the market right now. We have oil below $90 today. I mean, oil's made a gap down under 90 today. And I mean, well, let's see on like a 3-day chart. it's starting to lose this bit of a higher consolidation with this crazy leg up that we had in February, which was just a real quick spike, and we've been consolidating ever since. We haven't been, it's not that we haven't been below 90 before here in the recent couple months, which we have a couple times. So whether this holds or not will be important, whether it ends up breaking out or whether it comes back down. And I think we can come all the way back down if things do go well. Yeah, it's really consolidating here, so it's pretty tough, but we're riding these EMAs up, the SMAs and the EMAs during the day. So it's providing some level of support on the upward trajectory, including SPY. This is a 5-minute, this is a 15-minute here, so it would look very similar on SPY. So let's see what we do here at this 9 EMA. I would like to see it hold, and I would like to go long, but with the 751 call being 40 cents, it's not really ideal. I'm looking for a $30 contract, so I may have to wait another 10 minutes, 20 minutes and see if something can happen, but it may be a no trade day, to be honest, if this just doesn't really work out. If there's like no momentum, we can't break out above 751. If we can't get all the way down to 748, obviously that's probably not going to happen anymore. I'm not even considering that anymore. But below 748 would have been a short opportunity with momentum and volume. And above 751 with momentum and volume would be a long opportunity. But I'm just not seeing it right now. It's consolidating up at the upward resistance level from earlier in the day, which correlates with that fair value gap from Tuesday. And so basically we're right in between support and resistance, and it's like a literal $2, $3 range, which is not good for day traders. So I do recognize that this is not the best environment, specifically in the week since Tuesday, yesterday, to day trade. I only have today and tomorrow to really look at the markets, and then I have to go back to work on Friday, and I'll be very busy. I have a lot of things going on, and I really can't lock in as much as I want to, because I have to work this job and I have to pay my bills. I have to increase my responsibilities, and I have to take it very seriously. So that's why with this trading account, I really want to scale it up so that I can supplement some of my income and some of the missing time and hours that I haven't been able to fully put in working 2 jobs, 3 jobs, which I have done in the past, which I'm trying to do less right now because I'm trying to do other things like this, trading the market, reading, learning about stocks and companies and understanding what's happening so I can be more informed and so that I can make better decisions. But right now, I'm getting to a point where I'm very, very tight, becoming squeezed in terms of my time and my ability to actually do the things I actually want to do. I'm very limited, and it really sucks because I'm broke. I don't have enough money, and I don't have the opportunity to work a decent job that pays me well. I can't really make more than minimum wage. And at the end of the day, I truly believe that the only way that I can truly escape at this moment, besides a business venture, which I'm working on, is to invest in trade, and trade to invest, to reinvest, and to keep the capital flowing. So if I can make money trading, then I can invest more. And if I can invest more, then my net worth can go up. And if I can make enough money trading to do both, investing and supplementing some of my income, maybe $1,000 a month, even $2,000-$3,000 a month would double my income and make a big difference in my life. Absolutely huge difference if I could just make $2,000 or $3,000 a month trading in aggregate over time. Obviously not every month will be the same. Some months I may be down, some months may be flat, other months may make $5,000-$10,000. It depends, and my account's nowhere near that to even consider right now. But with my account being right now at $81.80, actually $81.10, after taking a loss last Friday, a small loss that I'm trying to be diligent about the trades that I take. So here we have SPY somewhat losing the 9 EMA, no closure, 30 seconds till close, 750 puts at 23 cents. I'm not interested really in going short at this moment because of all the support we have in this small range that we're in. So it is difficult, but it doesn't mean I can't take a trade and still make money in the last 30 minutes of the day. It just means that I need to be cautious, and I probably need to be very diligent about stopping out, maybe even early on a trade if I were to take one today. So let's see what happens if we're gonna hold here. I think we should hold and possibly go higher, but if we don't hold here and get back above 751 with some seriousness or close the candle there, which we just have not really closed the candle above 751. If you look right here, that candle closure is at 751 exactly, but that doesn't count. If you look, 751 close. So we have not closed the candle above 751 at all. We have put in wicks after wicks after wicks, similar to back here, and we're starting to lose that. This is a resistance level, so it makes sense that we would come back down off of this. But that means we're going to come back down to the VWAP at 750 flat, most likely, which limits the opportunity to take a trade because the volatility is dying intraday and on the week so far. We're in the range of yesterday still. So that's the dilemma, is the opportunity is not as good right now because the volatility is not there this week, at least so far. Yeah, that 750 put's already up to $28. It is tempting to just take it here, but still have 3.5 minutes on this closure. It's not really ideal. If I were to take it here, it's more like chasing. We're actually at the 21 EMA here. So we lost the 9 EMA, but this is technically the 21 EMA on the 5 minute. We're almost losing that too here. And that is a 750 put, so it's really not that crazy, but I don't know. I feel like I might take it, but I don't know. It's just gonna sell off really quickly here, then I won't be able to enter it. The contract's already at 31 cents, so I'm not gonna take it. But this type of candles make trading very difficult because we just get this one red candle that kind of makes sense, but for me to enter it, I'd have to take an early entry, and I'm not really looking for an early entry. I'd prefer a late entry. The contract's already at 33 cents. And then after that, the next strike is like just too cheap. It just doesn't make sense. And I don't think we'd get down to 749 or 8 anyways. So yeah, so missing the trade, even if I were to take a trade on this candle, it would possibly be worth it, but I'm not doing it because it's just these candles just happen too fast where we just get a big red candle out of nowhere when I want it to be bullish, and it seemingly is bullish, but we can't even close above 751, which is the big level I'm talking about. And we're still way above the short level at 748 or even 749, but really 748, which is the low of the week, well, just around there. So for now, I'm just going to be patient. Still have 32 minutes and to see if we can get a chance to get some momentum in the market here. But right now I don't see it. A little bit of a short, but I don't really think, even if we come down another 30 cents, I mean, yeah, the contract will be at the money, which is good, but I just can't really take that risk on this. It's not really much of a setup. Besides that, we're rejecting resistance at 751. We didn't close above it, and we're getting the sell-off under the 9. And if we close below the 21 here, I mean, maybe, but the distance is very short. You know, the 21 EMA is at 750.50, and the VWAP is at 750.03. That's only like 45-50 cents. With a contract that's at the money, though, it makes sense. So right here, on the 2-minute chart, coming back up, we got 21 and 9 EMAs right above us. We've lost the 21 and 9, which we were riding this whole time up on the 2-minute. Inside bar on the 2-minute chart right here. Green bar inside this previous candle. Contracts at 28 cents for the 750 put. Seems reasonable, but it's not ideal to take it here. I may take it anyways just to have it, just to take the trade, but I'm trying to give it a little bit more time. It's starting to feel like we might just get that sell down to 750, maybe a little bit below, and that would put the contract in the money, which would be decent. But let's see if this holds an inside bar, or if it breaks up to the upside, then we'll hold off on taking a put. The high of this candle, oh, okay, we open another candle, and we're breaking above 750.65 is the level. So if we get above 750.65, kind of puts her off the table. If we don't get above 750.65, shorts here still can work, and we can still go lower. It's just not ideal, but on the 2-minute, we are losing the trend, but we're right in between the EMAs and the VWAP. So the volatility is pretty dead. There's 750.65, and we are testing it. Previous candle high on the 2-minute chart, which is halfway in between this 5-minute. Well, I guess no, yeah, it's right here though, but on the 2-minute chart. So we can reject here at the 9 EMA and the 21 on the 2-minute. Possibly that correlates somewhat with the 9 EMA on the 5. It may be worth taking the put because it's actually almost at the money. Like, it kind of feels realistic to take a 750 put because it's only 26 cents and we're only 58 cents away from it. Seems reasonable, so I may take it here before it passes 30 again, but not yet. Give me like let me see, 3 minutes in this candle, 3-4 minutes out. Yeah, but if I do take a put here, then I'm just gonna have to, you know, stop out, and that'll put my account back down to basically where I started. I started the account with $66.74. Made it up to 103.42, and then on Friday took a loss down to $81.10, which is where I'm at right now. So win one trade, lose one trade. It's been like that. A couple weeks ago I lost 4 in a row, which was terrible, but we're kind of getting a rejection. See if I can take an entry here, possibly. It's just like, it's hard to even get into this. See, the contract's already getting up too much, but... Alright, well, I took one at, I think, 32 cents. Well, see, it's not ideal. I had to mark it in, but I took that 750 put at 32 cents. 750 put on SPY, 32 cents. Just because we're getting some type of confirmation or rejection on the 2-minute chart at the 9 EMA after all these other things that happen. And I think it's possible that we can come back down to the VWAP, which is at 750, which is at break even, which is at my strike, is a 750 put, which is positive because if we can get down to 750, these contracts will be at the money, maybe even in the money. So in that sense, it makes sense here, and I'm willing to take the risk. If I have to lose $20 for it, then so be it. But it's pretty clear to me that on the 2-minute chart, we're losing that trend. And we could definitely break below. It would be 750.30, so under 750.30 we get some type of confirmation that the trade could work out. But if not, if we just go higher here, then, you know, the trade is kind of invalidated, and it's very difficult because the volatility is not there. And we keep chopping today, so yeah, we go up to resistance, then down to support, and then we're doing the same thing over and over. Yeah, see, we're getting a big green candle. Okay, so there we go. Totally took a terrible trade there. But I'll just, we'll see what happens. That's what happens when you trade sometimes. You get confirmation, and then you take an entry, and then we get like a weird candle. I would call it a scam candle, where we just have this bearish setup, and then we get like a wick above all of it for some reason. But we'll see what happens here. It's looking pretty ugly, though. Took the contract for 32 cents. It's instantly down to 24 cents. Instantly, it's at 24 cents. We're still at the 9 EMA on the 2-minute chart, but yeah, I don't know. It's looking like the sell-off is coming in a little bit here in these last few candles on the 5-minute, and the 2-minute chart looks pretty, especially positive in terms of a sell-off here. We broke below the 21. Which was our trend, and we're retesting it on the upside now, which would act as resistance. So if we were to sell off here below 750.30, the trade can work out. But it's trying to put in a weird candle, it's retesting both of those EMAs on the upside, as well as on the 5-minute, the 9 EMA. Just tested that. So it's kind of sketchy, I'm not gonna lie. Today's not the best day to trade. I'm just doing it because I really don't have much time. I only have 2 days. I actually only have 2 days per week that I can even get on and stream and trade. So I'm trying to take at least, maybe just take one trade a day, you know. And if the trade is bad, then I learn from that and I can avoid that type of trade the next time. That's all I can really do. That's really all you can do as a trader, is take the risk, understand the risk that you're taking, and then whether it works out or not, learn from it and keep that with you as you continue to take more trades and assess the market. And the candlesticks, which is basically what I'm trading off of, is the way the candlesticks are. I'm not thinking about the news or anything. So yeah, it looks like it's wanting to invalidate. It's not ideal. That definitely sucks, but I don't know. We're getting a green candle here now. Green candle. Contract's down $10 already. From 32 to 22 on the 750 put. Already. That's all right. Yeah. Still got 24 minutes until the market closes. But yeah, we're getting these green candle now. This is not it. Not it. I'll tell you that. I just wanted us to break 751 and hold it, but no. We had to come down, break the trend, and then now we're going to go higher again. Like, it's just, that's what I'm talking about. It's just pure chop. Today's a day where you just don't even want to take a trade at all. Like, it's just not the best day to trade. But I don't really have much of a choice. The only days I can trade, actually, I believe, are going to be Wednesday, Thursday. Not even Monday, not even Friday. I can only trade and I can only stream on Wednesday and Thursday. And I have no choice. I don't get a choice. I don't make my schedule. I only have the ability to trade the specific days that I'm allotted to. And I can do the best that I can during that time and take the risk. And if I have to take the stop loss at 10 cents from a $30 contract, then that's what it is. Take a $20 loss on every trade. And I would be looking to make at least $20 to $40 per trade when I do win. And those are only at the base level. Most trades that do win, they should actually do a lot more than that. And they probably return $50, $100, which is the outsized return I'm looking for, 2, 3, 4 to 1. And that can only happen if I actually take the trade and let it do what it's going to do. So if the trade invalidates like it is right now, we took a put like right around here, I guess, I don't know, right before this. And now we're basically invalidating this whole setup here at this 9 EMA, and we're kind of almost getting right back above it. So it's pretty much just cooking me. It doesn't mean that the trade won't work out, but you know, right after I take the trade, it has to go against me. It just happens all the time. I take a trade, it looks good, and then we get a candle in the opposite direction right after I enter, which is annoying, but it happens all the time. So it is what it is. But the only way this trade could work out is if we do get down to the VWAP, which is that 750 level, which is the strike that I have. So that's what I'm looking at. If it doesn't happen, then so be it. I have to go over something. I have something important about concentration versus diversification, something that a lot of people are talking about in terms of diversifying their assets and portfolios. And in my opinion, I think concentration, obviously concentration is the way you create wealth, and concentration is going to be very important for most young people. And even people, like I said, I tweeted last week, that people under 50 years old with less than $1 to $10 million, you really shouldn't even consider diversifying anything. You should be focused on what actually is working and be a part of it and participate and capitalize on that outsized return within the market, which is the AI sector, the infrastructure build out, the technological innovations, and SpaceX, NVIDIA, Micron, AMD, Intel, Google, Amazon. And Apple, these are some of the names that are innovating with the technology, and they're increasing their value. And over time, even the biggest names are still going to have outperformance. So here the trade's totally invalidated now. That's quite unfortunate. So contract's down to 17 cents from 32. So be it. So far I'm down $14, $15 on the trade. And my account's down to 65.94, so basically right back to where I started, even a little bit lower. So it's going to be a negative percentage. If this trade loses here, I'm going to be down on the whole account. I started with 66.74. So if I lose any more than $14 on this trade, which it's down like 12, 13, 14 right now, then I will be at a red point in my account after 3, 4 trades. Today would be the 4th trade, I think. Maybe actually the 3rd. I took 1 winning trade and then 1 losing trade on Friday. And then today, Wednesday. So I'm still short though. I'm still going to hold this 750 put for the next 10 minutes or so. But if it gets down to 10 cents, I'm probably going to have to stop out, which sucks. But to be honest, this chart is just like playing games. And it's not unexpected. You know, this is very choppy market today. There's really not much of a price action or discovery. We're not going higher. We're not even getting down to support. We're just in the middle of the range and we're just going sideways. So any move that would have been profitable was very short term and didn't last today, which means that trading today is like, it's one of those days where you could just like not trade, ideally. But for me, I'm taking the trade because I have to, I want to take 1 trade a day. I don't want to force it, but you know, if I feel convicted in the setup being bearish here, then that's what I'm doing. I believe 750 is possible by the end of the day. It's easily possible, but we could also just get a massive green candle for Trump saying we have a negotiation with Iran. He could say that, and then we'll just get a green candle and screw my trade up. So it can happen, and it's not my fault. It's just the fault of all the circumstances at once. So let's see if this sells off here. Like I said, under 750.30, which is that relative low. We need to get under 750.30 for this trade to work. If not, then I really don't think it can work. And it's already somewhat invalidating itself. We closed 2 candles above the 9 and 21 EMA on the 2-minute chart, and actually one of them on the 5-minute chart. And then we're getting another sell down below, which it's just like a scam choppy chart. Like, these candles are pretty scandalous, I'm not gonna lie. Like 2 down, 2 up. Now what? We're gonna get 1 big down? I don't know. It'd be nice, but this candles are just like the 2-minute chart is just really choppy. We get 1 big red candle, then we have an inside bar, then we go higher. Then we have another big red candle, or then we have like a gravestone doji, and then we do the same pattern over and over. 3 different candles back to back, just repeating. So, not ideal. And it's not really selling off. If it were to sell off, it would go fast here. It's just not doing it. Contract's down to 18 cents, so still down 20 or $14. Trading a choppy market is not ideal. See, 17 minutes until close. All right. Yep, there we go. Green candles. Green candles. All right, contract's down to 14 cents. There we go. Down 17, $18. Here we go. There we go. My account is officially red. Once again, I've already had to reset my account with $50. Literally 4 times probably at this point. I think it's 4 times. Which means I've failed the $50 challenge 4 times already. And I'm trying to not fail anymore, but I'm trying to continue to fail until as many times as necessary until I can actually break out and actually have a couple good trades that push me forward. So right now I'm going sideways and I'm going nowhere. And it's very frustrating. But I have a very limited scope. I can only get on and I can only trade at the time when I'm able to. And I can only trade and get on at the days when I'm able to because of my schedule and my job. So I don't have the luxury of actually learning about stocks. I don't have the luxury of actually getting to research and understand what's happening. I don't have the luxury of scrolling through Twitter all day. I don't have the luxury of reading news reports and understanding what's happening. I don't have the luxury of trading when I want to. I can only trade very specific contracts, very specific systematic process, and I can do the same thing over and over, only 2 days per week. And they're not just random 2 days, only 2 specific days, the days that I have off of work. Other than that, I don't have any freedom or ability to make decisions on my own. So that's why I'm doing this, because it allows me to make decisions on my own. It allows me to experience something that is self-directed, which is what I want, to be self-directed and have the freedom financially and momentum-wise. I want to have the directionality to choose what I want to do. I don't want to just have to work, hate my job, have to come home and feel terrible, and then have to try to figure something else out in the meantime. It's very difficult to do so. And it's very difficult. That's all I could say. It is extremely difficult. And for me to make a few $1,000s means nothing in the grand scheme of things. I posted earlier today that $1 million in this economy means really nothing. You could have $1 million today and you could spend it in 3 years and you could be broke. You could do it way faster than that. A lot of people have these crazy lifestyles and they show off all their supercars, they do all this, they show off their home and all this stuff and their setup. And they probably make money doing that, not doing what they say they do. I'm not saying that most people don't make money from their business, but a lot of people's business is the lifestyle. A lot of people's business is pretending and LARPing that they have a bunch of money, that they have a nice house, that they have infinite time and capital, and they could just do whatever they want. They could hire people, they could literally do whatever they want. Most people don't get that luxury. Most people will never have that luxury. And that's the truth about capitalism. And it's a good thing because most people aren't worthy and most people don't try hard enough. Most people fail and they give up. That's why 90% of traders lose, because they give up, not because they actually lost everything. They probably ended up just investing and they actually made money doing that. So in the grand scheme of things, 90% of people are profitable because they invest. People who try to trade, it's a totally different thing. It has nothing to do with investing. It has nothing to do with anything but acting as if you're a business and that you have a strategy and following it consistently over time. That's the only way that you can possibly see a return. So that's the way I see the trading landscape, the FinX, the financial side of Twitter. It's a lot of LARPing, it's a lot of fakeness, it's a lot of BS. All the prop firm nonsense, don't trust any of it. Don't trade prop firms. You can trade prop firms and treat it like a paper account, because that's literally what it is. It's a paper account. You can spend $100 on a prop firm on a 50K account, and you could probably get a payout maybe in a couple months if you fail a few times. It's possible, but it doesn't mean that that's the way that you should be trading, and that doesn't mean that's the way that everyone should hop on board and try to do so. Most people should really save up and invest enough to where they can actually have expendable income and have a little bit of play money, which they can then try to trade with, and they can then try to be strategic about and figure out how to turn that into more capital and actually have a return on their capital. So it's just a matter of patience. Great things take time, and I mean a lot of time. Some things take decades to accomplish. Some people will take 10 years to become a profitable trader, and if they don't give up, you best believe that they will. But the moment that they quit and they feel like giving up and they stop doing it, of course they lost. Of course they failed, and they are part of the statistic. So just don't be that guy. If you like something else, then do it. Okay, the trade's a little bit green now, but it's very volatile. This is weird. I'm not sure what's happening. This is confusing. Yeah, we just had a candle in like half a second down to the VWAP. The contract went from 25 to 38, which is barely profitable, but now it's like this choppy action is really scandalous. Like I was saying, this is scam candles. I want to see under that VWAP and then I'll sell the contract. If not, then the trade is just like not really working out in a very good way. Like this looks like an overnight action. This looks like an overnight. This looks like the type of price action you see overnight on the 2-minute chart. There's like a gap in between the candles damn near. Like this price action is really scandalous right now. The algorithms are bugging out. So we need to go in the money under 750 because that little half a second is just not enough time to take profit. You know, I looked at it and it said 38 cents, but now it's down to 21 again. So yeah, all I can say is that the trade will work out if it wants to, but it's being very, very tricky here. And I don't even trust these candles right now. Like this just doesn't look right. The way this candle's moving, the way how fast that just happened, and like at the 10-minute rigged, I guess that's what it was, but the 10-minute rigged candle, we just had that. Yeah, I don't trust it, and probably gonna just take a full stop loss because I'm getting scammed by these candles right now. I'm not gonna lie. Yeah, looks like I'm getting scammed. I'm not gonna lie. Yeah, I mean, look at this candle. What is this? So it only has to go to the VWAP for literally half a second, and then that's it. We're good. That's it. Yeah. That 2-minute candle is just gross. I don't like looking at it. Whatever. It's so frustrating, this kind of a trade where it's like it's red 50%, the next thing you know it's green 20%, then instantly it's back down to where it was. I just feel like I'm getting robbed right now. It feels like I'm getting pickpocketed by the market. You know, they're gonna take $20-30 out of my pocket. So be it. But it's a good example of what a full choppy trading day looks like, and when you try to trade it, you get scammed. That's what this is right now. We couldn't even get below 750. Like we just literally touched the VWAP so perfectly that it's like literally that should be investigated. Like that just can't be right. Like that's just the algorithms. That's not even like a real person. That's just the algorithm saying, okay, we need to put a wick in at the VWAP and then everyone can get stopped out and fuck them. That's what that says. It's a big middle finger to me again, just like on Friday, a big middle finger from the market. Appreciate that. I'm probably one of the most poor people in the country, mentally, financially, and yeah, I still have to experience this. It's very difficult and it's annoying. I almost like trading by myself because I can do what I want, but I'm trying to be disciplined with this, but trades like this just feels demotivating. And I'm already demotivated, so it's not surprising for things to be more demotivating. It just becomes more demotivating the more life goes on. So if we don't get below 750, the trade's gone, and I'm gonna let it stop out at 0 or at whatever. It's already I mean, it's like, it just feels cooked. The way this contract's volatile, this price action makes no sense. We only have 5 minutes left. So, yeah. It's like 40 cents out the money. We can't even get in the money for a second. Like, okay. We go under 750, I'm selling this thing so fast. If not, then it's gonna stop out right after the market close because I'm gonna have no choice but to get out. If we don't go below 750 intraday here into these last 5 minutes, then the trade is cooked. That's basically what I'm betting on at this point. I'm betting that we're going to break that 750 level at any measure in these last 5 minutes, starting now. $0.30 away. Seriously? The contract's still red though. It's not even close. It has to be in the money. That's the only way this contract's gonna be profitable for me. We got increasing volume into the close. It's a mix. It's not necessarily green volume, it's a mix. Actually, a little bit more selling volume, I would say. May not look like it on the 5-minute chart, but on the 2-minute chart, we have higher increasing selling volume. Break below 750 would grant me a profitable trade right here. 4 minutes and 28 cents. You'd think that in 4 minutes we can get a 30-cent sell-off, but I'm just saying there's a candle close at the low. I think that's a good candle close in my opinion, but the moment it closes, we get a bounce inside bar, like once again. So yeah, let's see, can we get under 750? That'd be cool. If it doesn't happen, then I'm stopped out. Sometimes that's how trading is. It's like so systematic and so like black or white that it's either this happens and you have a win, or this happens, or it's either this happens and you win, or it doesn't happen and that's it. There's nothing else. There's no gray area. It's black and white. It's either the trade's in the money and it's profitable, or it just doesn't happen. That's how trading is. You can't predict the future. You can only take the risk. That's the difference. You're not predicting, you're just risking. And it's not any kind of risk. It's not a negative connotation to it. It's a positive calculated risk that over time should allow you to be able to capture positive trajectory and become profitable, whether it be in a short time period or over long. And I mean short as in like months, long period is in years. Not intraday, not week by week. It takes a lot of time to really see it through. And that's what I'm really challenging myself to do, is to really see it through and do it right. That's what I'm trying to do here, but we'll see. Still down $10. Negative $10 still on this contract, still 33 cents out the money. Just a weird spot to be in, honestly. It's quite a weird spot with 2 minutes left in the market. Actually, yeah, 2 minutes. What is that? I don't know. 2 minutes left. 30 cents out the money, and it's gonna mess around. We got that VWAP though, so that's not ideal. I mean, we could easily break it. But now we're getting increasing buying volume, so it's looking not good. We're getting a big green spike in volume. Yeah. Going into the close again. Yeah, this is weird. Very choppy. Very boring price action. But after the market closes, I'm just gonna do a quick talk on concentration versus diversification. I think it's important. But yeah, it looks like this is totally cooked. We're just not selling off by any means. And even if we do sell off, it's going to be like a half a second spike down, and I'm not going to be able to get out. And it's very annoying. So it's kind of pointless to even try. Whatever. Literally 1 minute till close, less than a minute. Okay. Contract still down $11, $12. Yeah. And it's 50 cents out the money. Yeah, oh wow. Well, appreciate it. Thanks, market. Thanks, Mr. Market. Very good stuff. All right, well, the market's about to close. There we go. Market is closed and it's cooked. And my contract's still at 19.20 cents, even though the market is closed. Only down $12 on the trade, but yeah. Yeah. That's weird. Well, looks like I'm gonna have to stop out in the next couple minutes because the market's closed. I can trade this contract for like 5 minutes, I think, but pretty sure it's like 5 minutes, but it could easily just get wiped right here, but I don't really mind. Still a chance that we could just get a big spike down, which would be profitable, but it's just not really looking like that. So I don't know. Quite a frustrating trade, just a lot of chop, just this whole area, just chop. And we're still well over 750. Yeah. At least I'm not down 80% on the contract. I'm surprised, but I mean, it's only 40 cents out the money, but yeah, I'm gonna have to just give up on the trade. It's cooked. Can't marry the trade. I'll give it a minute though, but I could lose an extra 10 bucks in this next minute. I don't want that to happen, but the contract's still only down, well, it's down 40% now. Yeah, and it's not looking bearish. I mean, we're still not going down at all. Wow. These earnings are gonna cook this trade even more. Yeah, it's one of those trades where it's just like very frustrating and yeah, okay, I'm gonna get out. Okay, here we go. We just get these little green candles after hours, of course. Yeah, I gotta get out. Oh well, that's the trade. Took a $18 loss, and my account's down to $61.78. Yeah. Absolutely terrible. I mean, it just makes me feel some type of way. Because I really just can't afford to do this anymore. I can't afford to just lose over and over. Well, I'm not going to do the talk. I'm not going to do the monologue on concentration and diversification. I'll do it tomorrow. Because I just want to get off. This trade is so annoying. So, yeah. Have a good one.